actually go live.
It's always
Oh,
like
we're
this.
live. Hi, Gabriel. Welcome to Venture with Grace.
Grace, thank you for having me. I'm excited to finally be here. I'm excited.
Amazing. It was so fun to we did the reverse VC pitch at the robot fight.
Yeah, we were. VCs were supposed to pitch startups, and startups were really enjoying it a little bit too much, in my opinion. But that was fun.
I know, right? So I want to start with maybe we could, and then also obviously recently I come across the YouTube algorithm feed your Cluely video to me that the Cluely people were previous guests, and then I don't know if that's a keyword search or something, but it was such a good video about and I didn't even know that that's the entire approach. I mean, I think he shared a bit about how they make videos and stuff, but it was not super in depth about the 200 video and then distribute into multi-channel. How do you actually do this research for your videos?
I have thankfully people helping me, and it's been documented. Like we didn't, get it from the Cluely people themselves. But
Yeah.
yeah, what's interesting, I think, is it's also what we're trying to do at Lobster Capital is you got to sort of take content, and that's what you're doing as well, by the way. But that's what
I
very
feel
few
the
people.
content game is so everybody's game these days.
Well, it is and it isn't. Like if you look at VCs, like
Mhm.
I don't know, like content, you have to be extremely consistent. And I believe there's this myth in content that it has to be extremely good content. And of course, it's better if it's good. But I actually think quantity matters probably as much because if you publish every day, you just experiment better, faster. And
Yeah.
so if the Cluely the Cluely team does 200 videos a day, then maybe they have just two that work. But if you have two videos every day going viral, well, you're beating Cluely and you're doing great. So people just have this thing where, oh, I'm going to publish one podcast episode every month because I need it to be perfect, edited for hours, and it would probably be better to have something every day that's not as polished. And of course, then at some point you get a team and it's both polished and daily. But so that's what Cluely gets. And you're asking me off record because the video on the Lobster Capital channel is, is Cluely a scam? So you're asking me like, hey, do you secretly hate them? And the answer is not at all. I admire them for the content. I mean, there's a lot of things that are not great with Cluely, but the content is just very inspiring and it works. Like, everyone talks about them.
For sure. I have so many questions. Maybe we start with Lobster Capital. So since you guys invest in YC, that primarily just YC companies, right? So you invest in top 2% of the YC startups. Have you studied what is the top 2% of YC startups? Because one day I read a tweet that the tweet basically said that there's a fund that invests in every maybe 20 or all the consumer bets in every batch, and then still losing 96% of money or whatever. There's absolutely no success whatsoever. I don't know why they still invest, but I feel um I heard basically the consumer companies are not as strong as the B2B companies. I don't know if you agree with that or no.
Well, it depends. If you have a broad look of the entire history of YC,
Mhm.
consumer has done pretty well. Airbnb is consumer, Reddit is consumer, Coinbase is consumer, DoorDash and Instacart are consumer. And you could argue that even Dropbox is consumer, and it's both B2C or B2C. So all of those are YC startups and are doing extremely, extremely well.
Mhm.
So, but then maybe if you just take three specific batches in 2017, 18, and 19, I'm saying random numbers here. Maybe in those years, consumer were not good. But
Mhm.
what I think is interesting in what you're asking about, YC sometimes gets a bad rep with some people, and they're not necessarily wrong. And by that I mean YC is not perfect, and it's not every single company that goes through YC is going to be a multi-hundred billion exit. Like
Mhm.
YC is actually very good, but they're not perfect. They
Mhm.
don't have a crystal ball to predict the future outcomes. And so there's still some very bad companies at YC. And so that's what most people understand. People put every YC startup in the same bag. And so you could make 90 YC investments and they could all be terrible.
Mhm.
And the real problem with YC, and that's the problem I try to solve for myself and now through Lobster Capital, was the really good deals that you want are very difficult to access because YC is so famous, everyone is trying to access the same deals. And
Mhm.
so I realized if you really want to have good deals, you have to have a system. You have to be dedicated to only YC. People who just do a lot of things plus YC on the side usually don't sort of, are not up to date and can't get into the hottest deals.
Mhm.
But even that is not enough. You have to have a way to sort of secure allocation. And so we have our own way at Lobster Capital. Some
Mhm.
other funds have that as well, but you're competing with the biggest names in Silicon Valley when you're trying to get into YC. But basically, the message I want to repeat here is YC in itself doesn't mean much. There's a lot of different things inside YC and some good and some bad startups.
Mhm. So how do you define the 2% startups? Because I think like the thing is like, do you feel like the hottest people in each batch are actually the hottest, like most successful company in like 8 years? Or is there any study around that?
So yes and no. It's interesting. We don't only follow hype because so basically some hyped companies are hyped for the right reason and they're great and we invest in them and they're very, very hyped. Some
Mhm.
hyped companies, in our opinion at Lobster Capital, are overhyped and we don't invest in them. So,
Mhm.
being hyped is one signal, but it really isn't the only signal. I've been investing in startups for 13 years now, and I've realized something that is very humbling is my opinion doesn't really matter.
Mhm.
Most seed investors, when they invest in a startup, they do it because they fall in love with the idea or they fall in love with the team. And so they just think, oh, Grace is just so talented and charismatic, which is true, by the way. So she will succeed for sure. And sadly, that's not true. Being charismatic and awesome doesn't guarantee you succeed. Or they'll say, oh, Grace's idea is just so cool. I would use it. I love that idea. So I'm going to invest. So they fall in love with the founder and the idea, and that doesn't work. And why do people think that? By the way, is sometimes they did this once 10 years ago and it did work, but it's called being fooled by randomness. Maybe you were just lucky. It's not because you're so smart, it's because you were lucky to invest in one startup that turned out to be good. So what we do at Lobster Capital is we really try to humble ourselves and remove ourselves from the equation, and we say, hey, we don't need to like the founder. We don't need to like the idea. Let the market decide. And so the top 2% are the top 2% of teams. And this is a, whether we like them or not, this is what's been studied. So repeat founders with exits create better startups. Founders that come from great universities. If you've studied at Stanford, that's the number one creator of unicorns is Stanford, graduates. Could be MIT, Harvard. And then if you come from a big tech background, if you worked at, SpaceX or Meta or whatever, again, it was already very difficult to get into those jobs. You had to jump through a lot of hoops. And so it means you're already selected and talented. And of course, you've been selected by YC on top of everything. So that's also something added. But then the most important thing that we over index on is top 2% of traction. So again, we don't need to like the idea. We want the market to like the idea. If you're a YC startup and 90% of the startups will finish the batch with 10K, 50K, sometimes 100K in revenue, we find the startups that finish the batch with 1 million, 2 million, 3 million in revenue. That doesn't happen by chance. It happens if the founders and the team is extremely good, but it happens if you have huge market pull or product market fit. So whether we like it or not, the market likes it, loves it. That's who we back. And remember, when you're investing in a startup, you want to invest in a company that's growing fast. Well, if they're already growing fast before the investment, you can bet that there's a good chance that with extra money, they're going to keep that growth happening. And that's what you want.
So basically, people already figure out like product market fit. But I think the problem of this approach is like, I mean, I traveled with a YC company at, like on the boat, like the other, or like on the yacht or something, and then they're they're maybe like a batch from like 2024. Basically, the founder told me that like they had maybe like you mentioned, like a million, 2 million traction or something. And then once they are off YC, they plateaued because of like, ChatGPT came out or like some other stuff that are like happening, and then like their function just like got killed immediately. But they had to like try to like re-figure out what is their product. Like how do you kind of like um evaluate the traction and then the potential like ARR, like MRR or something?
So, two things. One, this approach that we're having we don't pretend to have a crystal ball, right? We don't pretend to say we will only pick winners and it will always work out, right? You can pick a company that's growing very quickly, and just like in your example, things could fall out later. But and also the other way around, we could skip a company that doesn't have a lot of revenue at demo day, but then maybe the founders actually figure it out later. That's also possible. So we it's not 100%. No one has 100% unless you're God and you know everything, right? Um, but that being said, you bring up a very interesting point, which is I make it very simple for everyone to understand. We invest in the fastest growing companies, but growth and traction and ARR, MRR, not everything is equal. You have to check, is it defensible? How are they acquiring customers? Because sometimes, you get to 1 million, you only have 3 customers paying 300K each.
Or it's just like your YC badge, and then they
Or
all
it's just YC badge.
gone. So
That happened to us as well. We were, I think it's 1 or maybe 2 batches ago, one of the fastest growing companies in the batch, but like 75% of customers were batch mates. So we passed on them. And I said, how do you keep having, acquiring customers after the batch? And his answer was like, eh. So that's also, I'm a 7-time founders with 3 exits. And so I've built so many startups from scratch, and it's very hard. And every time you start a new startup, you have to acquire customers and figure out how to sell to them. And it's again very, very difficult because people don't care about you. And so I always ask them, what's your customer acquisition strategy or engine? What is, what's getting you new customers in the door every day? And if I'm not happy with the answer, you can't really BS me, because again, I've done it so many times. And then you look at retention and cohorts and churn numbers and net revenue retention. It's like there's so many ways. So again, I oversimplify. Revenue is just one thing. You want to know everything. You want to know about the margin, because sometimes they have a great revenue, but it's all being paid directly in AI cost. You want to know about the customer acquisition cost. If you're making $1 million, but you're spending $2 million to acquire them, like there's a lot of moving things. So of course, we dive much deeper than just the pure revenue number.
I wonder, can you show us like the backend, or like do you guys have like a tracking system, or like what are some stuff that you mentioned about these like factors, or like do you rank them as like this is like 1 point, that's 1 point, and cumulative there's like a point system, or how do you make sure that you track everything that's consistently? Because I think the problem is like a lot of it's like vibe check, especially for YC company. I feel like it's all vibes. Like at the very beginning, a lot of it's just maybe they have a really hypey launch video, and then they just got like attraction from all the top VCs, right? So like, how do you kind of evaluate that kind of stuff? And do you think the top YC company are backed by, Sequoia, A and Z, and like it's actually very like obvious, or is it not from like a data perspective?
Yeah. So I agree. I think a lot of YC's vibes. I actually see every batch companies building something that I think is meh, and then the traction is meh, but then they're very good communicators, very good fundraisers, very, very good on playing with investors' feelings, like fear of missing out and pressing your buttons and stuff. And maybe a very, like you said, a very beautiful launch video. Maybe they're very active on social media, whatever. And I don't get it, So usually I tend to not invest. And those rounds usually do extremely well. And again, like maybe I'm wrong and I'll be proven wrong in 10 years, but I don't get the fundamentals. I think it's a lot of vibes and FOMO. So this I don't participate in. Now you ask me, so you asked me 2 questions. First is, do we have a system? Do we have points ranking? Yes. We don't rely on it to make decisions. It's just informative for us, and we're constantly improving it. I actually, I do have a score, but that I don't really follow the score. It's just, again, indicative for me, probably because I still need to work on it and refine it. But we have a set number of things. We have a checklist of what we want to see. And that checklist is extremely, extremely high and restrictive, which means that that's the checklist of the top 2% of every batch. So every batch, very, very few startups qualify. And so we talk to them early, so there's still allocation. And
I have a question on since you mentioned about chat early, right? So like now the demo day is what, like next week or like the week after or something like that, right?
Yeah,
So
December 3.
Is there any benchmark on how do people get in? So like I've heard, not like how do people get in, but like, how do investors get in? So like I've heard that people were, there's like people told me like, oh, apply online. And then there is some people are like, hey, you have to back the current badge. And then the current badge person have to manage the message the group partner or whatever. Like, what is the actual process to actually go to demo day?
Oh, go to demo day. Well, yeah, you have to apply on YC's website. I think if you've invested in a YC company before, a certain amount, and I think that's 50K in the last year or in the last 2 years, then you can get invited. That's the thing. If you haven't invested in YC, it's much harder to get invited unless you know someone. That's what they said probably last year. That was the rule. Again, the rules can change. Like it's not an exact science. But if you're an active investor in the ecosystem, in the YC ecosystem, then they'll invite you. So it's kind of harder to get your invite the first time. But then if you keep investing, they'll keep inviting you.
I also heard that like you have to like invest when you get there. Like, are those like OBS or like this is like?
Well, you don't have to. But if you don't invest, it's going to be harder to get reinvited. But then if you want to invest, I don't know if that was your question, but like founders will, sign the papers like right there on your phone. Like they'll do it right now. Like
But
if you
I've also heard that like, before the demo day, it's like where all the good companies are gone. Like you have to like even like so I have invested in company that gotten into YC. And I have invested in like the YC badge of like, like just like I guess before the batch closed or something like that. But I actually don't know if there is like a like I consistently heard that it is like if by the demo day that you haven't really raised, then your company is like kind of like dead or like
that,
it's not like not it's a
I
no.
mean, that's again true and false. Some companies raise before demo day.
Yeah.
Some choose to wait for demo day. Some show up to demo day completely oversubscribed and are raising, but that's rare. Most companies
I think
will
that's
actually.
artificial, right? So it's kind of like you kind of calculated that like, oh, by demo day we'll be like oversubscribed.
That exists, but again, like most companies will keep allocation for demo day. So maybe they show up at demo day with already some money in the bank. For example, there's alumni demo day. So before the actual demo day for investors, YC alumni have another demo day before separate. And so many YC alumni did really well, have some money, founders of Airbnb, Brian Chesky and Joe Gebbia. Sam Altman is a YC alumni. Like there's a lot of people here with some money to invest, obviously. And so they can, they'll raise from that, for example. But again, many show up with some money raised, but I would say it's not a majority that show up to demo day and have zero allocation left. That's actually the exception. It happens, but it's actually the exception.
Okay. So what do you think about like so I mean, what is your process to track every year? So like there's a lot of like YC founder came to our dinner and stuff like that. So like, but on the other hand, I feel like it's impossible to like actually manage to track the hundreds of companies every batch. And then it's getting bigger and bigger. And then for each company, let's say there's like 3 people, that's like literally 300 people like per batch at least, right? So like how do you kind of like think about the process of like tracking them? And then like also like you mentioned about the score system. So I've also chatted with like other people's like primary strategy is like to go after YC, right? So it's like you said, like not everybody have like a full YC dedicated capital group, right? So like but there's a lot of investor that like tracks YC or like primarily invest in YC, especially they're not from Silicon Valley. I've seen some other people's like Excel sheet. There's like, I mean, this is like not proprietary information. This is like literally they publish on their website, that kind of stuff. So there is like obviously the team score, like the previous traction score, blah, 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 blah. But what is like the core stuff that like you mentioned, like the traction is like very important for you guys. And like in what format do you kind of like collect these of information? And then do you use AI? Since like yesterday we have another emerging manager who was like the VP of Corp Dev at LinkedIn. He is amazing at like using AI to like sourcing and like diligencing the traction and stuff like that. So like, do you guys build your own like AI system in house to like kind of track these things?
Yes, we're building it now. So it's not great right now, but
Yeah,
that's
I
exactly
code
what
it.
we're building. That's exactly what we're building. Because you ask me like, how do you keep up with 300 people? Yeah, because we're YC only. That's like we spend a lot of time. We spend a lot of time tracking 300 people. We also have a YC podcast where YC founders come and share their stories. So we get to meet them and know them. Not all, but we publish every week an episode. So I get to sit at least with 50 YC founders every year, and listen to their stories, and they'll remember that and refer me to someone else, etc. So that's one thing. But yeah, we dedicate and spend a lot of time with mapping the batch and figuring out who the founders are, and etc. And then of course we also on top are building, we already have rankings, but right now it's not really powered with AI, but now we're augmenting it with AI capabilities to try to understand what matters to us most, which is like team and traction, and try to use AI to help us figure this out. So again, it's very very early. We've been working on this just for a few months, but let's see. And what's interesting, like we don't need it. Like we have other ways to figuring this out, but it's always like a way for us to double check or make sure we haven't forgotten anything, or blind spots or stuff like that, which is always interesting. And I'll give you an example. There was a company in the previous batch that we invested in with Lobster Capital, and they were building something very weird for YC, which was a friendship app for women. Basically, women move a lot in their lives, and when they move, they don't have new friends in their new cities. So they're building this. And so, because it's not your typical YC dev tool or whatever, it was very overlooked. Very few investors reached out and talked to them. But our score and signals told us like this was actually an interesting company doing quite well. And they ended the batch with $9 million in ARR. And so, that was, I think, then when they showed up at demo day and presented and said, we have 9 million AR, like everyone in the room was crazy, was all over them. Those two founders just drowned. But we already had invested because we had detected them early. So that's what the tech we're having helps us, is figure out some of our blind spots.
Where do you find the information? Is this like public or like where?
That's this I won't say more. That's what we're building, and that's how we win. Yeah.
Okay, so do you acquire data from like, do you buy data basically, or like is it harmonic?
No, it's not. Again, I'd rather stay super vague here. I've been investing in YC since 2019, or trying to invest in YC since 2019. I think my very first investment was 2020, and so we've built a lot of ways. What's interesting is I've always been an outsider to YC. I'm not an alumni, and so what it was originally a big disadvantage for me because I was not in the network, but I actually turned it into an advantage by learning how to infiltrate YC and know everything about YC. And that's why we built this big media company under the umbrella Lobster. We talked about the YouTube channel and the podcast and we also have a newsletter. And so now YC founders know us and knew who we are. So we had to try 10 times harder to make it into the YC world, which is why today we win.
I wonder, so like also like I feel like so another question for this is like, would you say by the, I know that like you mentioned that you did not go to YC and all that kind of stuff, and like do you feel like when you track the $9 million ARR, was it from actual like data like AI sort of things, or would it be like from actual human, like for example someone who knows someone who, or you meet someone at a dinner or something, like on the soft skill set? So like you don't have to say the exact, but like it's like which direction.
Both happen. That's why also like we talked about AI and scraping and buying data, whatever. But yeah, relationships matter a lot. Everyone in YC knows each other. It's a very very small world. People spend 3 months almost locked in together, and it creates very very deep bonds. And from one batch to the next, people go back, give back value to the community. So yeah, I spend my entire time with YC founders. So yeah, people talk. People say, "Hey, did you check them out? Did you see that? Did you hear about this, about that?" So, and then there's also a lot of YC investors like myself, angels and such, that I keep very close relationships with. So, it's a small world.
Um, I wonder, so like let's dive into like the trends or like the subsectors. By the way, hi Fernando. We're gonna address your question later. So I think the trends is like right now. So like yesterday I heard there's like a new YC company that does like mosquito drones. So like a drones go in and kill mosquito.
Yep,
I was like,
Tornol, it's called. Two
do you,
French founders.
do you know it's good or no?
I mean, what do you mean? Is it good? Like, it's the
Like just
drone
buy
is.
drones to kill mosquito these days or no?
Yeah, I think it seems like it's working already, which is very early and very impressive that they did it so quickly. From what I heard, and I don't want to share information that's not public from them, but I've heard or I know that they opened pre-orders and it did really well on pre-orders. I was impressed by the numbers, and it's autonomous, quiet, and it actually works. And there's no pesticide, no nothing. Basically, when they detect a mosquito, they go to the mosquito it's a mini drone like this, and they'll crush it
Oh
with
no, I
the
don't
drone.
picture it.
Yeah.
It's too much for me.
And so it's basically for if you have a big garden, or if you're a museum or a public garden or whatever, you can have one or two drones just do a round on the perimeter, and whenever there's a mosquito. And so they say after 2 or 3 weeks, basically you're mosquito free, and that's it, because it's going to just kill them all. I mean, so YC, it's interesting. Everyone thinks, oh, YC is only AI, and YC is AI for sure. But there's also stuff like this. We invested in the last batch in a company building small missiles like this to shoot down drones, defense missiles.
Mm.
In this batch, there's a company building fusion reactor in space. Like, there's a lot of hard tech in YC, and that's really cool. That's really interesting and fascinating.
Um, I guess like speaking of the trends, right? So like we chat about like so there's like historically the consumer company performs well. Like right now, would you say to avoid consumer at all costs to if you're an individual or angel investor? I think like for the YC badges, there's like obviously there is a lot of obsessions from like the bigger firms or whatever, but like I think the more is like the more of the listeners maybe a lot. I think there's like if there's like three traditional listeners, which is like the VCs, the startup founders, and then the tech um community builders, right? So like people working in tech and stuff. So I think YC is the only thing that's like fitting into three bracket of like people's investment philosophy, because there is like the tech curious people who have like a little budget to invest, but like they can still like invest in stuff, right? So like I guess like when you're thinking, by the way, this is not investment advice. This is a purely for like information.
Entertainment purposes only. Yeah.
So what would you say is like the most profitable sector across YC? Have you like done any data to study this?
I mean, yes. It's a weird answer. The most profitable is B2B, but that's because
But that's
the
Silicon
vast.
Valley. Everything is B2B.
Exactly. That's because most of the startups in YC are B2B anyway. But I mean, we're generalists. And so I'll tell you my philosophy and how I think about it. I don't look at B2C or B2B. I look at exceptional people building exceptional companies who are already making exceptional amounts of money. And if it's B2C, if it's B2B, if it's hardware, if it's software, like, I don't really care, as long as the companies. Remember, YC says make something people want. So if you're making something and people are wanting it, that's good enough for me. So if you sort of want to make your life, maybe go with what you understand. Like, if you understand B2B, go with B2B. If you understand consumer, go with consumer. But go with, I mean, first of all, I have this whole theory of like why angel investing is not great, because you usually don't see enough deal flow unless you're full time. Otherwise, you should have a professional do it for you. Could be a fund, could be something else. So that's a whole thing. But if you really want to angel invest anyway, I would go with something you understand. That's Warren Buffett's rule. I invest in stuff that I understand.
Um Would you say, like, I guess, like, the other question I have for you is, like, when you're out there racing for your own fund, what was the LP's, like, profile? Like, are they, like, they just never, I mean, I feel like YC is, like, a easy, I wouldn't say it's easy access, but I think, it's, like, it's more obvious, right? It's, like, everything is, like, listed on the screen. So what's your thought on, like, the defensibility for the fund, and, like, what do you feel like LPs, like, typically ask you when you mention, like, you're YC only?
Yeah, there's a lot of. I mean, so YC, it's both easy and hard to be a YC fund. It's easy because everyone knows YC and knows the quality, and yeah, sometimes it's hard for the reason that you just mentioned, that a lot of people think they can do it themselves, and in some cases that's true, but in 99% of cases that's not true. But people don't necessarily realize it, and so that's earlier I talked about the different levels of YC. There's the top and then there's the bottom of YC. And so a lot of people do it themselves. They can't really access the top companies. And so they'll invest in the bottom half of YC, which sometimes could maybe give you good outcomes. But remember, around 50% of YC startups fail after 3 years, around 50%. So if you invest in the bottom 50%, you could have, and that's what you mentioned, like someone investing in 96 companies and losing on all of them, apparently, if I remember what you said. So
This is like a see my tweet, and then also, like, I was discussing it with some other people. I mean, I don't know if this is true,
yeah.
or, like, I mean, I don't have,
But
like,
so, but yeah, people it takes a lot of time. I think if you really take YC seriously and spend time, either you can finally do it for yourself, or you can finally realize, like, hey, yes, it actually is very difficult to do it on my own by myself, unless I spend a lot of time. And again, like, we're full time on this. Otherwise, we couldn't be doing it. So yeah, there's all this entire educating people's part to say, hey, YC doesn't mean much. Inside YC, there's a lot of different levels, and we're playing at the very, very top level. That's where we're trying to play, and succeeded, thankfully. So there's education to do there, but then there's a lot of people who just come to me and say, hey, we have no idea of how to access YC. We understand that you have the access. We want to be in the fund.
So are they primarily people from, like, outside of Silicon Valley, or, like, how do you think about, like, the fundraising perspective?
It's interesting, actually. There's a lot of people from Silicon Valley who, because I mean, being here in SF physically obviously helps, especially now. But there's a lot of people who are not in the startup world. Like, if you're a corporate lawyer, or if you're a surgeon or whatever, like, if you're in the Valley, you're probably making very decent money and want to invest, but you don't know anything about YC. So of course I don't have SF angels or such, because like they could just walk into demo day and do it themselves. Again, I think unless you're full time, you'd probably do better to give it to a fund and have better performance, even while paying fees. But that's another topic. And so then I have a lot of people from other places in the US. I have LPs from a lot of different states, sometimes not even far. I have an LP that's in, I think, Nevada. So it's close. But I asked him, he was like, come visit me in SF, and he's been just twice in SF in the last 10 years. Like, it's an hour and a half flight, but he just never comes. So has other things to do. So that's a family office.
But how do you find, like, I think for the family office problem is, like, how do you know, how do you qualify the LP themselves? Just because it's kind of like everything is based off, like, there's nothing you can actually track a lot of the LPs. They don't even have LinkedIn. They have no website. They're there, but, like, how do you actually access to the family office that will actually invest? And then is there expectations similar to, like, the Silicon Valley mentality, which is like, if you lose, that's fine. But, like, I think, like, the challenge of, like, not being in Silicon Valley, or, like, having the dentist, lawyer, investors outside of Silicon Valley is, like, it's a little bit tough, because of, like, their expectation is like, oh, you're gonna return me the money, like, 5x in 5 years, or, like, something crazy, right?
Well, lucky enough, our returns should probably be crazy. I mean, it's too early to tell for our first fund, but
Right.
I'm aiming and thinking it will be much more than 5x. Time will tell. Obviously, we don't know, but I'm okay with people having high expectations, because we're investing in the very best incubator in the entire world, in the best city in the world for startups. with the latest technological trends, including AI and a lot of other things, and semiconductors and drones and robotics.
Uh-huh.
And we're investing in the top 2% of that incubator. So of course it's top 2% according to us, but we're doing the high tier for sure of this incubator. So I don't have a problem with people having high expectations.
I mean, like, have you ever had people challenge you, or like, is there any like? So I think people have. I guess like maybe it's too early for you to experience if like let's say if shit hit the fan that like it won't.
No, that happens, of course. Yeah, before this fund, I was doing SPVs. I was doing deal by deal, and I did a lot of investments, and some of them went to zero. And yeah, people were unhappy. Listen, either people know about venture, and so they know that stuff happens, and sometimes companies go to zero. Or if they don't know, that's what I tell them. I say, hey, listen, that's what you signed up for. It's a risky thing. Whenever we have a deal going well, you might make 5, 10, 50, or 100 times your money, but sometimes you're going to lose as well. So that's why you build a diversified portfolio. That's why you're patient. That's why blah, blah, blah. The problem with SPVs is you don't choose which deals people invest into. So people will come in. I would do 15 SPVs per year, and people would pick 3 and walk away. And maybe those 3 don't work. And then they say, oh, you suck. Well, if you did the 15 that year, we're up 5x, but you didn't. And so that's one of the reasons that there's many more. One of the reasons why SPVs, I think, are not a great model. In the fund, people give me money and I'm going to build myself the entire portfolio that's diversified. And so some will fail, but overall, the odds that they make money is extremely high.
Let's talk about the SPV part, right? So like, I mean, I was like looking at your LinkedIn. So obviously you have done like a newsletter and like, maybe we could talk about like, so I think someone told me that like they feel like the SPV is just basically like a newsletter plus like link to your bank account or something. So when like I think the problem of SPV is like what you said, right? Like so it's like a very high risk, high reward situation, like hit or miss, like you could pick the right deal or not the right deal. When you're doing the SPV, like since like you wrote that like you have deployed like 36 million, which is a very impressive number. And why don't we talk about like how do you raise? Like I think like the challenge of SPV is like before every deal you have to do a mini fundraise, right? And then like
Yep.
sure, angelists have like a newsletter feed. Basically you can just send like this deal to like 500 people on your list. But the problem is like can you share a little bit more about like maybe using one deal as example, like how do you actually get people to like put money in? I think
Well, yeah,
that's actually a challenge each time, right? I don't know.
yeah, it is. I mean, I was very lucky and fortunate. So my story starts in France, where I'm from. I'm from Paris, and today I'm building a big social media in English, but I started on YouTube in French. And so my first YouTube channel was a French channel started in 2017 around startup investing. And so I was
Wow, you're
doing, looking at pitch decks during YouTube videos
Mhm.
and doing my analysis and be like, okay, this is what I like, what I don't like. Actually going to the biggest startup incubator in Paris, Station F, meeting with founders, and I would just put my phone down and record, and then I would publish on YouTube and would just ask them questions as a VC, etc., etc. So anyway, the channel blew up, and a lot of people wanted to invest with me. And so, to answer your question, how to raise for SPVs, I would say have your own community. It doesn't have to be YouTube; could be just friends and family, newsletter, Instagram, whatever it is. But create a community of people who like you and trust you.
Mhm.
And then I already had a background as an investor, as an angel, as a solo investor, but I did quite well as an angel. So I told people, hey, look, this is what I did as an angel. Those are my results. Now I'm going to share my deals with you. And if you want to invest, you can. And it's also a volumes game. The YouTube channel had tens and tens of thousands of followers, but only 900 people in total invested with me, which is still high, but that's maybe 1% of the total followers of my social channel. So it's
No,
also a numbers game.
good. Like I think like when people vote through cash and then like we're not talking about like $1 each person. It's like when you invest in startup that's thousands of dollars. Like I don't think like you should like underqualify yourself for like I think that's like kind of like the conversion is like not bad if you're like selling like $1,000 of product, right?
Yeah, exactly. So that's how I would say it. But yeah, it's difficult because there's lots of deals out there, and you have to convince people that your deals are the best. And every time you have to raise again. And so I was fortunate that people trusted me, and I think I believe I did very good deals. So people were very excited about them. You have to learn how to communicate that you believe in the deal to your audience. It's a whole thing. But in the end, yes, I don't really like SPVs for a lot of reasons, including, and that's Barry Eggers from Lightspeed told me that. He said, basically, SPVs, if they work, people are not especially happy because that's what they expected from the beginning. But then if they don't work, they're extremely mad. So that's kind of a problem. Again, with a fund, you have the diversification on your side. It's just a much better. And yeah, you get a lot of amateurs putting checks that probably should not invest in startups either because it's their entire savings, which is not great, or they just really don't understand. And so at the first startup going bust, they're going to be all over you, be like, oh my God, this is a scam. And you're like, no, that's the game. Like if you diversify, it's fine. So it's a lot of hand holding, and I've done it, for the longest time, and now graduated to a fund, which on many, many, many points, I like much better.
Why don't we talk about like I think like, maybe I want to maybe, dive a little bit deeper into the media turned like SPV vehicle, right? So like, do you feel like the 900 people were like, um, they all come in at once, like when you drop the SPV, let's say you have like, I don't know how many follower you had, but let's call it like you have 50K follower, and then that convert into like, let's call it 900 people.
That's about it.
Okay, yeah, great. So like, was it like, all at once you're like, hey, today I'm launching an SPV, subscribe, or like, can you actually publicly even talk about it? Because I know
Yeah.
even you're doing 506c, like you still have to like, you can't advertise, be like, hey, everybody, like,
Yeah.
subscribe to my SPV, invest with me or whatever, right? Like you can never say that word, right?
Yeah. So no, you're right. And so the way it happened for me, first of all, it happened over many years. So that's not, it's not just in one go. Like getting to, I think it's 42K or something followers on YouTube. It doesn't happen overnight, and so it's a lot of years in the making. But then on YouTube, what you do is at the end of each video, you redirect people to what's called a lead magnet. And so you say, hey,
Oh,
if
like download this freebie or something.
exactly, it's a freebie, and you get the email. You say, if you want to download my cheat sheet of investing in startups,
Yeah.
go into the YouTube description and put your email. And so from YouTube, you build an email list, and then on email, then that's when you try to sell what you're doing. In my specific case, because you couldn't advertise the deals publicly, I would say to people, join the private club from the mailing list, and then when you're in the private club, then you have access to the deals. So that's how I did it. But again, like it's not 900 people overnight. That happens over years and years and years of producing content, sending emails every week, and getting people to join, and etc. etc.
I wonder when you're, I guess like, okay, so that's like year over year. So like, do you feel like the SPV like crew, like, so how many people do you need to actually do one deal?
That's a very interesting question, in my opinion, because actually the answer varies.
Sure. Yeah, it's
Depends
like,
on the.
yeah, 100K. Do you need 50K or like whatever?
I
Like,
think so, but yeah, I'll try to give you
oh,
some numbers.
I have another question. So
Yeah.
like, I'm sorry, like this is like before I forget. People always like commenting, hating on me asking 40 questions in a row, but my brain's this big, so I
That's
have to like
okay. That's
dumb
fine.
down. So question is like, so when you're doing the SPV, I feel like the problem is like, first of all, like you have to get the allocation from the founder, right? Like you mentioned about like these like YC companies, like they're hot, yada yada yada. Like how much should you actually ask? And then like,
That's why I stopped doing SPVs, because it's
and then what
horrible.
if it's like too high or what if it's too low? Like,
It's
if
horrible. And then in YC, you get burned doing that. And so, you know, so to answer your question, with the platforms and stuff, you should probably aim for at least 100K. If you're doing 50K or less,
it's like
it's not
20K
worth it.
goes to Angeles, right? Something like that. Like something huge.
Sorry, the fees you mean?
Yeah. The,
I think it's 8K on AngelList. I think it's 8K.
oh, okay, 8K
Yeah,
is not
yeah.
like crazy.
But I mean, still, so you should do at least 100K. And so then you ask me how many people. Well, if you have people putting 10K checks, you just need 10 people. But if you have people doing 2K checks, then you need 50 people.
Right.
And so that's, I've seen some people doing, 1 million with 15 people. Yeah, that's possible. Depends on the check size. Now, on the allocation, it's tough. For YC, you should probably almost not even try to do it because you're going to get burned. YC people know that. That's why YC tells you to avoid SPVs. Founders avoid SPVs. And that's one of the main reasons why I wanted to build a fund, which is in the category that I play, the top deals, they don't do SPVs. They don't wait. They go with funds like Lobster Capital, who can just sign and wire the money the next day and move on. The way I solved it, to tell you, a little bit of info here, was I always underpromised and overdelivered. So I always got an allocation that I was sure I could fill. And then when it was filled, I went back and asked for more. And oftentimes I got it. Now, it did happen sometimes that I didn't fill my allocation, and that really sucks. You don't want that to happen. Luckily, it happened very, very few times, but it did happen. And that really, really sucks. And again,
So
I don't think SPVs are so great.
Like, so how much should you ask? Like 200K? Or like, and then also like for, yeah, sure. Like, you have the whale LPs that can like, fill like the 1 million by like 5 people or whatever. But like the traditional people who invest on AngelList are the 2K investors, right? So like, how do you keep everybody informed? Like, do you do these like webinars or whatever with each founder? Like, how do you make sure that they feel comfortable, or do you feel like they're very organic, like if they are already a sub and then like they immediately just invest?
I mean, again, for me, it's very specific. I was very lucky because all of those people knew me from YouTube.
Yeah.
So there's a personal connection, right? You see me, I'm here, I'm talking to you, I'm telling you why this startup. So it was much easier for me, I think. And also, I was not using AngelList. AngelList is great, but people are subscribed to many, many syndicates. And so you get bombarded with deals. And so your deal is just one among many others. So I was not using AngelList. And so people knew me personally, or, from YouTube, but like they know my face and who I am. Yeah, I would try to do webinars with the founders if I could, but that's also not great for fast moving YC deals. Like the founders don't have time for this. So, all of those things I did, but it's really in my past now, thankfully.
What is like the smallest amount of like people that you have? Like, I mean, also how long do you need to raise this thing by? And then what is the average like SPV amount of people that you have like per time? So like by that I mean like, okay, do you have to send to like, I mean, I'm sure it's probably organically sent to like 900 people, but like do you spam people every time, or do you feel like it's more towards like for this deal we're only going to go for like 50 people in this category who like imply that they're interested in, I don't know, space tag or like deep tag or whatever, and among the 50 people, like how many of them do you have to like kind of re-educate them about the space, or like call them, or like how many of them are just like, oh, I'll invest like immediately when I saw the newsletter?
I was very lucky that I didn't need to call people one by one. Thank God. And I would send it to everyone, and I would say first come, first serve. And that was pretty good because we did end up oversubscribing a few times. And so people were kind of scared. Oh, if I sleep on it, I might not have room. So I would run this way. Again, it's just my way of doing it. I don't know how other people do it. I know on AngelList, sometimes people have trouble filling deals. And so, yeah, they'll have to send emails and emails and emails. I would usually send 1 or 2 emails, say first come, first serve. And again, thankfully, we would usually oversubscribe. Probably, I believe, is because my deals were very good, but also because people knew me, knew my face, knew who I was, trusted me. That's my read on it. I don't know if that's why it happened, but most of the time, that's how it happened.
For sure. So like for one deal, do you like typically get like 30 investors, or like is there like an average?
No, it was everyone. I would send it to everyone, and I would say first come, first serve.
I mean, like how many people actually need to commit? I know that like they Texas
It
vary,
depends.
blah blah blah. But
Yeah.
like,
I mean, we've done SPVs in all those years. We've done SPVs from as little as, I think the lowest ones we did were under 100K, like maybe 90K. And the highest one was 1.7 million.
would you say like people's like, I guess like for the 100K one, do you think it's more investor, like 30 investor because everybody's like smaller investor,
Yeah.
or would it be like 50, or like for the 1.7 million, what was that, like, just 5 people? Like what is the average ish? Like
I don't know, but I would say like I can tell you like the biggest we did, like probably the 1.7 million or some others, were around 200 people total. At the
wow.
time, yeah, at the time, regulation was allowing up to 250, and now it's down to 99. The new rules, but
Right,
it
right.
was 250 at the time. So I'm
I
pretty
heard
sure
you
we had.
guys did 2 funds for the same thing.
Yeah, exactly. Then you need to do two, and it's like a whole other horrible thing.
Story. Yeah.
Yeah,
I
but
feel like
yeah,
the
so I think
infrastructure is like challenge after
yeah.
challenge. It's like,
Yeah.
oh my god.
But it was, or maybe not 200, maybe 180, 190 or something, but like almost 200. So that's the maybe over 200. I'm not sure that the biggest one. And then on the 90K, yeah, it's probably a bunch of people that putting like, I usually set a minimum at 2K. You can set a minimum at 1K actually, I think on AngelList. Maybe sometimes I set it at 1500. I'm not sure. But so it's a bunch of small checks, but it varies as well. Maybe you have one person investing 5K, 10K, and the rest at 2K. I honestly don't know. Like I don't check specifically, and I've done a lot. So, and it's a while back as well, so I don't remember.
Yeah. Wow. So question on your like newsletter era, right? Like, so you sold your newsletter to a fintech company. So, tell us more about like when you sell a newsletter, what does that even mean? Like, is that like you sell the distribution, aka the emails, and like, and then you're just like walk away from that thing for good, right? So
Yeah,
like,
that's
can that
exactly what happened. Yeah.
is that like
Sorry, go ahead.
is there a lot of money goes into buying a newsletter, or like?
It depends how many subscribers you have and what is it about. I started, so it's very funny. I started with investing in startups 13 years ago, but then after investing everything that I had in startups for so many years, I was like, okay, maybe I should diversify. And so I've invested in other asset classes, including crypto, real estate, and stocks, which were new to me. My very first investments were startups. And then I loved investing in stocks. I thought it was really cool, and stock picking, which I had my phase. I would say now I've outgrown it, but I was so happy with stock picking, and I was doing that, and so I was picking a lot of stocks. And as always with me, my entrepreneurial mind was at work, and I was like, if I'm spending so much time researching stocks and picking them, maybe I should start a paid newsletter to share it with people who are interested. And so I shared it on my YouTube channel, in my newsletter, in everywhere, which was already people interested in investing because it was around startup investing. And I said, hey, I'm starting a side business of stock picking. So every week I'll send you one stock that I've researched that I'm buying, and I'll send you short text of what's my research, why am I buying it, why am I bullish, and then if I sell something in next year, I'll tell you all of my positions basically, and it's a subscription. And so then I ran that business for, I don't know, a few years, 2 years, 3 years, not long. And but I've had the problem before of always starting new businesses. I'm cured now. I'm focused 100% dedicated to Lobster Capital, but I would start a lot of business because I'm a passionate entrepreneur. I just love building businesses, and so of course you start many businesses and you don't always have time for all of them at some point. So I decided to try to sell it, and yeah, this has value if you have enough investors on the newsletter, and also depending on what it is. But for everything finance related, it's obviously worth some money because each prospect could be worth hundreds of dollars, if not 1,000 plus. So when you have thousands of followers, like it could be a good price tag. And so that's what happened. I went with one of the market leaders and just sold it to them. And then you ask me like, what are you selling? Yeah, you're just selling the list. Basically, you're just selling it. They're also publishing stock picking newsletters. And so I told my customers like, hey, you're going to get it from them now. And I just walked away from the business with a check.
That's amazing.
That's
Did
called entrepreneurship.
When you sell, like, I mean, I typically hear people, our newsletter got bought. So like everyone's like explaining about the sales process is like they are being bought. So like when you're actually actively searching for sellers, like how do you kind of establish the relationship to be like a easy sell for you?
Yeah, I mean, first of all, you have to make the company easily sellable. You have to have a company that's easy to understand
By
and
the way,
easy
I
to.
super appreciate the realness because like everybody want to say they're like sold, but like obviously we all know if you want to sell something or like if you end up selling something, it's never like your like, you know, end game company, right? So like it's
Yeah,
like I really appreciate the like realness of like,
sure. Yeah, yeah.
approaching a seller and stuff. Yeah.
Sure. But so yeah, make the company easy to understand and manage. And then I did two things. One, you list it on marketplaces of people who are trying to
Well, there's
buy and
marketplace for that.
yeah, yeah,
Like what?
like Empire Flippers, Empire
Oh,
Flippers.
oh, yeah, Empire Flippers. I feel
Yeah,
like
but
that was
there's a
my
ton of others.
pandemic hobby to just like look at these things.
Exactly, but there's a ton of others. So you can just now at the time it didn't exist. Now you can just ask ChatGPT like, what's the best website to sell my newsletter, and he'll tell you, or she'll tell you. ChatGPT is a she, right? Um, and
It's a they.
it's a they. You're right. Oh my god, I'm not up to date to the SF code. Ugh,
Yeah.
shame on me. I'm gonna get canceled now. That's what you get when you're European. Like, what can I tell you? So yeah, you do that, and then you can directly reach out to competitors. Like that's what I did for, I think, yeah, my 3 exits. I've also directly reached out to some people, and so
Thing.
two came. No, one was someone that I reached out to. One exit. One was a marketplace, and one was someone inbound. So the newsletter what that we're talking about, actually they came inbound to me, and I wanted to sell, and it's like, okay, that's perfect. But yeah, you should know your competitors, know who they are. We're doing the same thing. They want to grow. They have money. I want to sell. Perfect.
Mm. I love that. So I want to be mindful of the time. Maybe we'll do one real question and 1 minute fire round.
Sure.
So I know that you're like very actively building up your YouTube channel. I'm like, by the way, amazing thumbnails. I love the thumbnails.
Thank you.
How do you operate that like a business, right? So like I think the thing is like, I think people never really like if you never done content, like you don't know like how much operational stuff goes into like
Oh yeah.
the editing, the searching title, like research, like publishing, even the publishing part, right? And then promoting it all the time. And then while doing like your own like fundraising for your fund, investing in the hot company, yada yada yada. How do you kind of like make it like a system for you to both like creating content? Like what would you outsource? What would you just do it yourself?
I've outsourced almost everything,
That's
and
amazing.
so yeah.
How
So there's a whole team of people behind it. Like there's 3, 4 people.
like full time or are they like subject
There's two full time and 2 not full time. So yeah, there's a lot of work hours that go behind it because
Your
we're a big.
newsletter must be very profitable. So like I mean I feel like to hire people from emerging manager fund is kind
No,
of
we don't like it's paid out of the fund. So it's not paid out of like the newsletter is not profitable in itself if you count all the people behind it. But we build it from the fund's balance sheet because it's a big advantage for the fund to get better startups, better deal flow. But so yeah, I've extracted myself from it as much as I can. It's still not perfect, and I still I still sort of have touch points daily, but yeah, I'm trying to spend as little time as possible. It's very easy to get sort of down the rabbit hole and just do content the entire day, and I love doing that as well. So I'm trying to, but yeah, I have people to manage that for me. But basically, we have we're very organized. We publish every week, so we have a calendar, and we really just try to build ahead of time, and it's just to always have. So like the one we're the most ahead on right now, we're looking at the last week of January. So that's in 2 months. And the one we're the least ahead, we're looking at next week. So, it's not perfect, but we're really trying to build content in advance. And then I have someone who's in charge of pestering me because sometimes I'm the bottleneck. If I need to shoot a YouTube video, like has to be me. And so I've told people, allowed them, but actually required that they never let me go, that they pester me until I actually shoot and send them the content. So I
Do you
have messages
badge
every.
that stuff? Do you badge produce stuff, or like do you like?
Depends. When I can, when it's ready to shoot several videos at the same time, I do that. Or podcast, if I can sometimes record 2 or 3 in the same day in the same studio. But sometimes it's one by one. It depends. If I can, I batch.
Amazing. Okay, I don't want to bore you with like 1,000 questions. Oh my god, maybe we address one of the audience question.
Sure.
One is like thoughts on venture capital putting more money into emerging regions, and then the other one's like, would a VC in a business in which the founder wants to exit, no IPO, whatever you want to just address.
I mean, emerging, super interesting. That's not what we focus on. We focus on Silicon Valley, which is the best ecosystem. But yeah, there's a lot of things to be done elsewhere. I've been to Lagos, Nigeria, looking at the startup scene. It's pretty amazing. I've been to Bangalore, India. It's pretty amazing. I've been to Singapore. Yeah, there's a lot of things. And then we don't want to back founders who are doing it for the exit. If you're doing it for the exit, you're not going to succeed. You have to do it for the company itself. That's how you have to do it to create value for customers, and that's what most founders want anyway. So that's good.
Okay, amazing. Okay, so also shout out to Fernando, Aliana, Godwin, and Osama for commenting. I mean, I want to give shout out to like people who comment. So, like, I feel like most people are like viewers, but like they never comment. So I wanted to encourage people to comment. Okay, what's your favorite book? Oh, sorry, this is fire round. What's your favorite book?
It's tough. I read 35 books a year. So
what?
Yeah, so it's tough to have a favorite because I read so many good books. I'll give you 2 answers. The one that has the biggest impact on my life, even though now it's the 4-Hour Work Week from Tim Ferriss. Now it's not really something that I need anymore, and it's really sort of outdated. But when I was 18, like, this changed me. And then one that I read 2-3 months ago that had a big impact on me recently was Buy Back Your Time. I forgot the author's name, sadly, but you can just Google Buy Back Your Time. Very cool. It put a lot of things into perspective for me, and I loved it.
Who would you invite to your dinner party?
Who would I invite to my dinner party? Peter Thiel, Mark Andreessen, Paul Graham, and Gary Tan.
Who made the biggest impact in your career?
YouTube.
Where can we find you outside of work?
With my family. I have 2 amazing young daughters, and I spend all of my free time with them and my amazing wife.
Amazing. Well, Gabriel, thank you so much for coming to the show today. It was such a fun conversation.
Thank you, Grace. I loved it. Let's do it again. Thank you so much.